Good evening, everyone. I hope you're all having a wonderful day. We're going to be breaking it down once again on the E-mini futures contract. I had a solid day today as far as trading goes. I did not get hurt in the flush or in the pullback that we had later in the day in H period. Overall, good day as I was taking longs early on in the day on any pullback, and then decided to take a few shorts later in the day that kind of paid me, and I could have held on for a pretty decent profit, but I decided to get out because I was not completely sure. However, good range, good volume once again on the day, providing plenty of opportunities for those of us that trade or day trade. If you're a swing trader, you're probably getting swung around like crazy as we've been opening with gaps. Um, Once again, we opened up with a gap today above the previous day's high, and just kind of had a pretty similar day from to this day back on the 10th, where we kind of grinded up, got into a set of single prints, and then failed again. Same thing happened today. We grinded up, got into that set of single prints right above that day's high, and failed once again to fill that set of single prints and rolled over. Only for the shorts that were late in the day, that were shorting down here. Anybody that was shorting, they began to get out of their positions, causing a squeeze. And once we ran these stops here and here, this thing shot up back to where our original POC was, or point of control, where you see this yellow line here. And keep in mind, we had a pretty wide point of control from the previous day that acted as a magnet as we were selling off to the downside and got back in the previous day's range. That was an area you could have targeted if you were on the sell side once we took out the day's low. So let's break it down. Let's go over everything. I'm gonna bring up excuse me. English is hard once again. Bring up our destinations. Once again, I've only bag adjusted so far on the June contract. That's what we're looking at currently. June contract on our 30-minute time frame, and we're going to be breaking it down time frame by time frame, kind of giving you an idea of what occurred throughout the day, and then we'll look at the larger time frame. We'll just look at the daily today, as that is probably the only one that matters at the moment, and I'm going to show you what it looks like on the SPY ETF chart, because right now it's kind of a disconnect between what is actually happening on in the ES and what is happening in the SPY. So we'll look at that and break that down. So as you can see here in A period, we opened up just above the previous day's high. Not only did we open up above, once again, we opened up with a gap. Like yesterday, we opened with a gap to the downside. Today, we opened with a gap to the upside after the CPI data came out. And I'm sure everybody was thinking that, oh, the CPI data came out, we're pushing up, this is all bullish. Well, no, all it was short covering. Anybody that was short yesterday and has been short over the past several days, they're obviously getting out, because what do you do when news comes out? You get out of your position, right? That's all it was short covering. And once the short covering gave up, what happened? We began to pull back late in the day. So we opened up with a gap once again today, only to fill that gap. So once again, 49th or 50th day trading day that we've traded, had several gaps now, both on the upside and on the downside, and only 4 have held. Once again, you could have shorted this to come back in and filled the gap. Once we got back in the previous day's range and seeing that we weren't getting much traction back in it, take the long to rotate back up. Once B period opened up, we back tested the open. It was a good long opportunity there against the open and the previous day's high. Could have taken a long there to rotate and take out A's high, because at the moment things were in buyer's favor. We had taken out the overnight high. We've gotten value overlapping the higher at the time, and we had opened up with a gap initially, but that got filled. However, we did take out the previous day's high, which stopped the one-time framing down, meaning we stopped taking out a previous day's low. We now took out a previous day's high to put us back into a 3-day balance. So once B period pushed back, didn't get below the open, and we rotated up. We took out A's high and started a one time frame up. We one time framed up in A or in B period. We one time frame up in C, D, and then in E is where things kind of started to take place as in the SPY we began to push up against the 200-day moving average, and you can see that here on the chart here on the daily chart. We began to push up into that 200-day moving average right around, and if I were to pull this up at the 30-minute time frame, you can see try to get this a side-by-side analysis here. And you can see as we pushed up in the ES, right here was when we began to push up against the 200-day moving average. So you had supply and sellers there, as well as walking into that high of day and where single prints started. So they filled at 74.50. We got up to 72.50, left 2 points, and then decided to roll over. We had opportunity to go trend plenty of times early on in the day. We had an opportunity to go trend in B period with single prints, failed as we filled them in C period. We attempted in C again, failed as we pulled back in D, and D ended up being a reversal bar after it took out C's low and rotated up, took out the high, and got to the 200-day moving average in SPY. And then E period, when we pushed up, couldn't take out D's high or get above the 200-day moving average. We rolled over and stopped the one-time framing up in F period. Initially, we were looking for afternoon pullback low in F period. It gave you plenty of opportunity to get long in F period as we pulled back, found some support, found some buyers, rotated up. You could have gotten out of your position and then waited for the next time frame because once G opened up, we took out F's low and began to one time frame down. Now you could have taken a long again in G period to rotate back up. In fact, I did actually take longs in F period and in G period against the 144 simple moving average on our chart, and half back at the time was right around the 50 level, as well as RTH VWAP was right around the 55 level. So taking longs against those areas and expecting to buyers to still take control of the day and not really seeing us get back to the open. However, once we pulled back in G, rotated up, and then began to come back down again, you didn't want to take that long position as something was starting to change. We were one time framing down at the time, meaning we're taking out previous 30-minute time frames low, right? So E took out F, or F took out E's low, G takes out F's low. So odds are likely that H, whenever it opened up, would take out G's low. So I was actually taking longs in F period against that 50 level, rotated up. I got out of my position at 62. And then in G period, when we pulled back, I got long around the 50 level. It rotates up to 60. What was it? High there was 62 in G period, and I got out 61 in G period. So really good long on my part there, as it was only half size. So no matter what, had I gotten stopped out, I would have, because I had my stop in just below 50 level, right around the 48 is where I had my stop. So 2 points below 50. We rotate up. I get out of my position. Didn't want to hold on to it because I did not know what the market wanted to do. I felt like the open was not safe. I even stated that today in Paul's chat, stating that, I felt like something was changing and that the open was not safe. Buyers did not have the open. And sure enough, in H period, we pull back, take out G's low, and this market literally flushes in an instant, takes out the open. So buyers lose that. And then we take out the IB low and the day's low in A period. And once we do that, we just continue to flush down into the day, back into the previous day's range. Next destination to the downside would have been that non-wide point of control. Like I said, those points of control where wide, time frames have rotated back and forth through that time frame multiple times, or through that price multiple times. It acts as a magnet. Yesterday, I was talking about how if we open up above it and we couldn't take out the day's high or couldn't find acceptance above the day's high and we rotated back in, you would go trade at that non-wide point of control, which would potentially act as a roadblock or some type of support, as it did have a high volume node there. So we rotate back into it late in the day. And what do? We find buyers where potential short covering began, and we rotate back up. You got to have these destinations marked on your charts. That way you know uh, where algorithms and short-term traders are looking to get out, like myself. Um, so in H period, I didn't do anything. And in I period, I decided to take a short against the open. Uh, it came in on me pretty good. I got decent profit out of it, but nothing that I could have held until we got into the non-wide point of control. But I decided to get out of the position for a quick scalp because I didn't know what we wanted to do, because we hadn't taken out H periods low, and we didn't get back above the open. So I didn't know what J was going to do when it opened up. I did get short in K period, right around 34.75. I didn't like the price action at the time. It pulls into 32 and I get out of my position for a 2-point scalp. And then this thing decides to roll in pretty good from 36, the high, down to 23, which was the low. And then L period opens up, rotates lower, and finally gets that non-wide point of control, which was ultimately my target. But I didn't hang in there. It was only a 2 lot, nothing massive. And made profit, but not what I could have. And then obviously we short covered into the end of day. So that's all that happened today, right? We rallied early in the morning, short covering stops. We test the 200-day moving average. We back off, sellers pile on as we get below the open, take out the day's low. And then they begin to sell down here. They get too short, and then the market rotates back up. So all we go out with today is today's low and today's high. We do not go out with an afternoon rally high, and we do not go out with a Y point of control. We just go out with today's high and today's low. So now we'll go ahead and mark our destinations real quick and then break down the daily time frame. This is the day's high at 72.50, which is now our balance high. And we're single print start. So there's going to be a lot that we label as here. So single print start / balance high / high of day. A lot going on there. Mark that. Boom. And then we have the day's low that we'll mark as well. Day's low, 05.50. Low day, is 05.50. So we are in a 3-day balance, right? And if I were to go to just the default and highlight exactly where our balance area is, or better yet, here I'll do one better. Make it a channel, right? Boom. Boom. So that is the range you're trading inside of, right? You got resistance up here. If you were to do support resistance type of style trading, you got resistance here. Resistance there. And then you've got support down here. Right? So resistance, support is all that it is, right? We're just trading in a large range, looking to find more market generated information, trying to see which way we're going to come out of this balance area. So the 3-day balance initially. So if tomorrow we take out today's high and don't get much above it, we will only be stretching the balance high a little bit. And then if we take out the balance low, take out tomorrow the daily low here, and then rotate to the balance low and don't get much below it, we'll only stretch it. However, if we get above it and then take back this trend day, we will potentially be going from a 3-day balance to 1 time frame and up on our daily. Same thing goes for the downside. If we take out this low down here at 40.75 and get good extension and close below it, you'll begin to one time frame or resume one time framing down on the daily. Right now we're just balanced, so you can expect some chop in between here. Let's go into our larger time frame, and then and like I said, there's going to be some type of disconnect between what the ES continuous contract looks like and what the June contract will say. But 3-day balance, continuous contract shows us above the 200-day moving average. But the one that matters the most to me is the SPY at the moment, because it is the most true price action, as we don't have rolling contracts or anything of that nature. So let me go into the SPY as an example. Sorry, guys. Sorry. Amateur, bro. Amateur. So this is going to be our balance. And it's crazy that our balance high is right at the 200-day moving average. So this is our balance area, right? 3-day balance. Trading inside this range, right? Now, can you encompass this full day? You could, but you're just requiring a lot more of a push to the upside. So far, our balance high is right above the 200-day moving average. 200-day moving average is kind of flatlining, which is what you can expect in a market that is consolidating both on a monthly and on a daily time frame now, but mostly on a monthly time frame. We're consolidating in a large range. But 3-day balance, looking to take out the day's high to get above the 200-day moving average and rotate up. Not a bad finish for the daily candle. Or do we rotate down and test the balance low and get below it, below 380 on the SPY? Like I said, we've a few days does not make a market. So far, we've closed below the 200-day moving average 1, 2, 3, 4 days in a row now, but 4 days does not make a market. Let's see how we come into the end of the week, as we have options expiration and dividend as well for the SPY. And then I believe we have PPI tomorrow, which shouldn't have much of an effect. Now, keep in mind, we do have the 20 crossing over the 50 here. If we get above the 200-day moving average, that is your next destination before you get to this daily high, is the 50 and the 20, right above the 400 level. Very psychological. Let's see how this plays out. Right now, looks like we got some short covering coming into the market. So any pullbacks you feel comfortable on, you can buy the dip essentially until something tells you otherwise, by like taking out a daily low once again. With that being said, ladies and gentlemen, I hope you all have a wonderful day. Thanks for stopping by. We'll catch you guys in the next one. See you.